Hey everybody, welcome back to Chipstock Investor Cybersecurity Edition. Once again, we had a couple recent videos on Fortinet and Palo Alto Networks, and today we're going to be focusing on CrowdStrike. We have a video that we just put out on Fortinet. We'll have another one on Palo Alto Networks coming in a couple of days. In both of those companies, we're focusing on the left side of this chart in the cybersecurity industry, network security and cloud security. Today, we're going to be focusing on the right side of the chart with CrowdStrike. CrowdStrike started in endpoint security, but now they have software modules that address the entire part of the right side of this flowchart. And they've also made some early efforts into traditional network security as well.
Here's another way of looking at this and visualizing what exactly CrowdStrike does. This is the flow of data through the global IT infrastructure. So endpoint security started there over there on the right, and in the top right, mobile devices and protection for mobile users, as well as maybe we should just say mobile machines in general. And these days, CrowdStrike now branching off into software level security as well as cloud and a bit of network security, which we'll get to here in just a moment. But first, Kasey, I think we need to address the elephant in the room when we're talking about Q3, and that is the July incident where CrowdStrike caused a Microsoft Windows outage, and that affected a few people, right?
A few people. And honestly, they've done really well despite this disruption. Adjusted earnings per share easily beat guidance. You can see the guidance down there at the bottom in that little cutout. It was between 80 and 81 cents per share. They actually came in at 93 cents per share. Per usual, it seems the media was not going to let a really good story slide, but ultimately, Crowd and Microsoft came out of the fire relatively unsinged.
Yeah. Delta doesn't think so. They're continuing to seek $500 million in damages. I think this isn't going to go away. This issue isn't going to go away quickly.
Delta got burned.
They did, or at least, maybe they're starting with a high estimate and they're going to be willing to work down from 500 million. We'll see. They'll probably settle out of court. But the point is, if you look at this slide, CrowdStrike did divulge the July 19th incident costs just shy of 34 million in Q3 alone. This is going to be an ongoing thing. But in spite of that, CEO George Kurtz did say on the earnings call that dollar-based net retention rate, or DBNR, was 115% in Q3. Obviously, that was impacted a bit by the IT outage. However, it's still positive. What this essentially means is for every dollar an existing customer was spending on CrowdStrike a year ago, they're now spending $1.15 on average. So CrowdStrike and its customers still have a healthy relationship overall, I'd say. Delta kind of muddying the waters a bit, but that's maybe a unique case.
Looking at some of the competitors for CrowdStrike, endpoint security remains one of the hottest parts of this already fast-growing industry. Some of the other competitors, of course, Microsoft being the biggest, SentinelOne, Symantec, which is a subsidiary of Broadcom, Trend Micro, and also even BlackBerry. I know we have one viewer that's happy about that.
Yeah, at least one viewer owns BlackBerry stock. Okay, lots of competition here, but CrowdStrike continues to be recognized by a lot of tech researchers, including Gartner, as the leader in endpoint security. So this is Gartner's Magic Quadrant, updated back in July. Despite the Microsoft outage that they caused, pushing out an update, CrowdStrike still very much not just doing well in the tech department, but with their ability to execute, their ability to go to market and get their products into the hands of customers. They're still very much doing quite well on this front.
From its core, endpoint security for mobile devices, Crowd continues to build out its software-based platform, and it also continues to use this AI native security tag. Yes, there is AI throughout the software stack, but in general, AI native is just a really cool buzzword.
Yeah, that's right. CrowdStrike utilizing NVIDIA GPUs and their cloud-based software platform. But, I think we're going to talk about AI and what foundation models are in a future video. So stay tuned for that. We'll discuss why AI native is kind of a buzzword in more depth and detail. However, from this core in endpoint, Kasey, CrowdStrike did announce yet another acquisition to kind of continue to broaden the scope of what they do.
Yes, CrowdStrike announced an acquisition of a cloud and software as a service identity security company called Adaptive Shield. The goal is to unify cloud and identity security with an integrated software as a service. We did a recent video and update on Semi Insider about CyberArk for identity security. Good time to remind all of our viewers that platforms like Crowd are operating from a position of strength right now. Point product security providers like CyberArk, though they may be growing very quickly, have to work extra hard right now to catch up with a company like CrowdStrike.
Yeah, and you will notice here, CrowdStrike continues to use this slide showing the different services that they've branched out to, the different modules that they have built around their endpoint core, one of them being identity management. You can see Okta and CyberArk not listed in this chart, but maybe just for now. We kind of expect at some point they will probably branch off into this. Remember, CrowdStrike is competing with the other big platform players like Palo Alto Networks and Fortinet. And so just adding more point products into the mix just makes sense. Will CrowdStrike make an acquisition of a company like CyberArk? Maybe they just purchase a smaller provider and build from there. It remains to be seen. But the point being, I guess, would be if you decide to add CyberArk, a smaller point product solution to your portfolio, remember just to take it very slow and start very, very small, because companies like CrowdStrike are in pole position. They are the fastest car. Let's do a pivot though here. In this video, after the incident back in July, let's just take a quick refreshed look at the financials. Let's start with the balance sheet first. As you're looking at this balance sheet, this is probably a good opportunity for us to tell you about the company that we've been using to make these charts, finchat.io.
Yes, in fact, FinChat is having a Black Friday sale, 25% off any paid plan. This doesn't happen very often, so if you've been thinking about maybe getting a FinChat membership, check it out now, 25% off any paid plan.
The reason why we've begun using FinChat in our videos, as you've probably noticed now for the last few months, is it's a fantastic end-to-end platform for analyzing a business. One feature that I like about it is they have business mode where you can turn off stock price considerations and just look at the financial metrics and KPIs, key performance indicators, as if you were a business owner, not a stock analyst. Big difference there. We think that's really important, an important bridge for investors to cross at some point in their journey as they up their skills. FinChat has a great tool set for that.
In order to get this 25% off, you have to sign up by Monday, December 2nd at midnight. Check out the link below. It is finchat.io/CSI to get your 25% off of any paid plan. So let's look at the balance sheet for CrowdStrike. Fantastic balance sheet. The cash and short-term investments have actually increased to $4.26 billion in Q3. Long-term debt sitting around $743 million in the last 12 months.
Yeah, this is important. CrowdStrike, of course, uses different terminology than Palo Alto Networks. Palo Alto talks about platformization. Fortinet talking a lot about its unified operating system. CrowdStrike taking a different route. They have CrowdStrike Flex. They also have financing plans for customers now to help onboard those customers to the whole platform, rather than having a bunch of point solutions, a bunch of vendors addressing different parts of a security stack. You can get most, if not everything, from one vendor, depending on the type of business you are. This is especially important if you're a non-tech business, and simplicity is a key concern, as well as cost. And so CrowdStrike, when you're talking about an industry undergoing consolidation like this, it has exactly the type of balance sheet you want to look for in a company.
One other chart on CrowdStrike from FinChat, free cash flow per share only going up. Tell us about this, Nick.
Yeah, this is one of our favorite metrics here. And I think there's still some bad habits that were picked up during the bear market a couple of years ago, where you subtract stock-based compensation, which is always a big concern with a software company like CrowdStrike. Folks, I don't know how else to put this in any other way other than just that's what GAAP net income is for. If you're worried about stock-based compensation in the bottom line. Free cash flow per share requires a little bit more legwork, or you can pull the chart from finchat.io and they give you a clear picture of this, has the effects of stock-based compensation embedded in it. When you use a per share metric like this, it gives you a clear picture of the free cash flow, which is cash available to the company and its shareholders for things like stock buybacks, eventually down the road, maybe a dividend, making acquisitions, all that stuff that fuels a business's growth and expansion and ultimately rewards the shareholders along the way. You don't need to subtract stock-based comp from free cash flow. That's GAAP net income. Okay, end of rant.
So let's do our reverse discounted cash flow for CrowdStrike. This is as of November 26th, 2024. Current stock price, $343. Market cap of $89 billion. Nick, walk us through this reverse DCF for the current stock price.
Yeah, and we're going to use free cash flow per share. Free cash flow was down very slightly year over year in Q3. So this captures this a bit, and we are going to have some ongoing effects from the service outage in July. So bear that in mind. But this is what gets us to fair value today. These are not our estimates. This is just one scenario that gets us to the current stock price, which is a type of consensus valuation that Wall Street has given this company. So trailing 12-month free cash flow per share of about $4.70, per share profit growth CAGR of about 25% for 5 years, and a 7% terminal growth rate thereafter. We've used discount rate standard of 10%. That gets us to a fair value of about $350 per share. This is a much higher bar for CrowdStrike to clear than obviously a few months ago back in July after the stock took quite the header after that security and service outage.
Revenue growth has dipped below 30%, and free cash flow profit margin may not have the same upside potential that it had the last couple of years. The July incident turned out to be a wonderful buying opportunity for those that wanted to boost their position in Crowd. So congrats if you took a position or added to your position at that time.
But given the current trajectory of the business, slowing down a bit, perhaps the margin expansion story starting to ebb, cool off just a little bit. At this point, obviously, a bit more caution would be in order. It's ironic how this works. Obviously, a lot of investors thought you needed to be abundantly cautious after the stock price dipped all the way down to almost $200 a share again in the wake of that July event. But I think we're going to take the opposite view here. We already have obviously a sizable position in Crowd. We have for a number of years. Our initial purchase was after the IPO. So this is why we haven't personally been buying all along, because it's already a core part of our cybersecurity industry basket of stocks. But if we were looking to add CrowdStrike into our portfolio, at this point, we would be looking at a dollar cost average plan, a DCA plan, buying perhaps monthly or maybe even just quarterly, so that you are buying and taking advantage of what are inevitably going to be some dips, some volatility in the stock price, given the high valuation.
Okay, everybody, thanks for watching this episode on CrowdStrike. Make sure you sub to the channel, like the video, share with your friends, all that good stuff. Take a look at Semiconductor Insider. Membership is only $5 until January 1st, when it increases to $10. So check it out now. Link to that Semiconductor Insider membership in the description below. It's at our Ko-fi page. Please sign up there if you're interested. And check out that finchat.io Black Friday sale, 25% off any paid plans. See y'all again soon at Chipstock Investor.